Have we seen the peak in home sale prices? Are we headed for that bubble that everybody's been talking about? Well, on today's video, I'm going to be sharing a market update from Zillow and Redfin and also compare that to what's going on right here in Florida. That's what we're covering on this video. Stay tuned. What's up, everybody? I'm Rob Wozner, a local realtor here in Southwest Florida. If this is your first time on my channel and you want to know everything about eating, sleeping, working, playing, and the real estate market, this is the channel you need to subscribe to. So hit the subscribe button and tap the bell so you're notified every time I drop a new video. The big news is that we are starting to see sellers actually drop their sales price. The actual amount of sellers actually dropping their asking price is now at a 6-month high. On top of that, houses are still selling very quickly and home prices remain very elevated at record high levels. In fact, many of the buyers who haven't been priced out of the skyrocketing housing costs have been rushing to snag homes before they become even more expensive. The typical home buyer's monthly mortgage payment is now $2,427, a record high, up 44% from $1,685 just a year ago. The share of home sellers who actually dropped their asking price shot up to a 6-month high of 15% for the 4 weeks ending May 1st, up 9% just from a year earlier. The 5.9% increase is the largest annual gain on record in Redfin's weekly housing data dating back to 2015. At the same time, the typical monthly mortgage payment skyrocketed 42% to a new high during the same period. Although a growing share of sellers are responding to the palpable drop in homebuyer demand by lowering their prices, sellers remain far outnumbered by buyers. So the typical home flies off the market at its fastest pace on record for more than its asking price. We are now seeing more price drops in recent weeks, and homebuyers are starting to find some relief from the competition. People who have been looking for a long time and were constantly getting beat out by other buyers are starting to get their offers accepted. They may be settling for homes that's not quite ideal, or the location, or maybe needs some work, but they're happy because a few months ago, even that seemed impossible, so they're taking it as a win. However, desirable homes in prime locations are still selling fast and for a premium, with no apparent slowdown in the near future. As you know from watching this channel, I am an active realtor right here in Naples, Florida, and we have seen over 200 price drops in the last 7 days. We have also seen an increase in new listings since December of 2021. In January and February of 2022, we saw around 1,300 new listings each month, up from 864 listings back in December. So overall, what we are seeing is this imbalance between buyers and sellers is still continuing. So when houses are priced correctly, meaning they are not priced above market value, they are still selling at record speed. Redfin also went on to say that homebuyers continue to be squeezed in nearly every way possible, which is causing some to take a step back from the market. Unfortunately for buyers hoping to find a deal in this competitive, as this competition cools, sellers are pulling back even faster, which is keeping the market deep in sellers' territory. I believe they are talking about a lack of new listings hitting the market here. So even though price drops are becoming more common, most homes are still selling above asking price and at record time. So right now, buyers are facing record high inflation numbers, or at least 40-year highs, rising mortgage rates, which have risen over 2 percentage points just this year alone. And on top of that, record high home prices. So basically, you're faced with a triple whammy. Homebuyers are really faced with some tough times right now due to the environment that we are currently living in. So let's talk about new listings. In Redfin's previous update ending April 24th, the number of new listings was only down 3.2%. Now in May, they are reporting that they are down 5.7%. So if we want to see home prices stabilize to get some normalcy in our housing market, we need to see the number of new listings shoot up greatly. Yet we are not seeing those numbers just yet. So because of that lack of new listings, we are in a strong seller's market. So let's look at some data from the National Association of Realtors on supply of housing. The existing housing numbers count everything except new construction homes. So the months of supply with the most recent data shows we have 2 months supply of houses throughout the country. The all-time record low was actually set in January of this year, which was 1.6 months of supply. So we're doing a little better than we were last month. Now to just zoom in a little bit on Florida alone on the supply side of the market, inventory remained tightly constrained in April of 22. Single-family existing homes were very limited with a 1.1 month supply, while condos and townhouse inventory was at 1.3 months supply. Well, what does that all mean? Well, in order to have a balanced market where it doesn't favor a buyer or a seller, we need to have a supply number in the range of 4 to 6 months. As you can see from the entire year, we have been in a seller's market with peak months of supply was in July and August of last year. Inventory has been increasing for 2 straight months, but we still have a long way to go to enter a balanced market. This is one reason I don't believe we will see any market crash coming anytime soon. So the level of active inventory is the housing market's barometer, gauging the relative pressure of demand versus supply. When demand persistently outstrips supply, the stock of homes available for sale is depleted. Like dropping barometric pressure, plunging inventory usually foretells stormy conditions, faster price growth, and faster sales. That's exactly what the market has delivered for the past year and a half. Now, according to Zillow, months of record low inventory finally began to see a slight rise in March, not just following seasonal trends, but increasing enough to begin closing the gap with inventory levels of a year ago. It now looks like inventory will notch a year-over-year growth sometime later in 2022, which hasn't occurred since September of 19. More inventory is both the consequence and the cause of a more balanced housing market. It gives home shoppers more options to choose from, limiting the number of buyers bidding on each home, and lights a competitive fire under sellers and their listing agents to make their homes shine and to be wary of overpricing. Inventory may increase enough later this year to slow the frantic pace of the market, as measured by the median home seller accepting an offer in just 6 days so far in the month of April. And actually, the pendulum might finally be starting to swing back to a more balanced housing market, but it'll take time to get there, and prospective buyers still won't have much reason to cheer because higher interest rates will keep home ownership costly, and slowing price growth is unlikely to end with falling prices. So it seems like month after month after month, I keep talking about low inventory. So how long is it actually going to take for us to kind of get back to normal? Well, even if inventory reaches the same month of 2021 levels this summer or fall, that may still leave inventory down about a third from normal pre-pandemic levels. At the pace of inventory recovery observed in March and April, inventory could take up to 30 months to reach even 2019 levels, according to experts at Zillow. So circle September 2024 on your calendars to see if the experts are true. And Zillow also published a number that they surveyed 100 housing market experts during the last quarter. And they asked them the same question: when do you think inventory levels will be back to pre-pandemic levels? And they said 38% expected inventory to recover by the end of 2024, narrowly edging out 2023 at 37% as the most cited year. So let's take a look at some leading indicators of home buying activity. Fewer people search for homes for sale on Google. Searches were down the week ending April 30th, 7% from a year earlier. The seasonally adjusted Redfin Homebuyer Demand Index, a measure of requests for home tours and other home buying services from Redfin agents, was down 1% year over year during the week ending May 1st. It dropped 10% for the past 4 weeks, compared to 1% decrease during the same period last year. So let's take a look at touring activity. From the first week of January through May 1st was 24 percentage points behind the same period of 2021, and that is according to the technology company ShowingTime, which all agents throughout the country use to schedule home appointments. So let's take a look at some numbers. The median home sale price was up 17% year over year, the biggest increase since August, to a record $396,125. As you can see on this chart, basically in 2021, home prices were increasing greatly, but this year has been highly abnormal. Also, the median asking price of newly listed homes increased 16% year over year to $408,458, a new all-time high. Pending home sales were down 4% year over year, the largest decrease since mid-February. As you can see, the pending sales were in line with last year all the way until the middle of April, where the pending sales began to decrease we'll have to keep an eye on that to see if buyer demand is decreasing or if it's a product of just the limited supply inventory that we've been constantly talking about. Let's throw in some Florida statistics. The statewide median sale price for single-family existing homes in April was $410,000, up 21.8% from the previous year, according to data from the Florida Realtors Research Department in partnership with local real estate boards and associations. Last month's statewide median price for condo townhouses units was $310,000, up 24% over a year ago figure. The median is the midpoint, half the homes sold for more, and the other half sold for less. In the longer run, price growth should start to moderate in response to higher rates, so this is an important statistic to keep your eye on over the next few months, as an increasing share of sellers will inevitably have to start adjusting their expectations to a degree. All right, so going back to housing supply, or the number of homes listed for sale at any point during the period, fell 18% year over year. So right now we have approximately 535 houses for sale compared to 2020, where we had over 900,000 houses for sale. So we need a lot more houses for sale to cool off this housing market. Let's talk about some pending sales, and 56% of homes that went under contract had an accepted offer within the first 2 weeks on the market, up from 54% a year earlier. So basically this shows that homes are still selling at a rapid pace and sellers are getting an accepted offer very quickly as well. 42% of homes that went under contract had an accepted offer within 1 week of hitting the market, up from 41% a year earlier, down less than a percentage point from the record high during the 4-week period ending March 27th. Now, happening right here in Florida, the median time to contract for single-family existing homes was 8 days compared to 11 days during the same period a year ago. And the median time to contract for condos or townhouses units was 10 days compared to 24 days in April of 21. Now, in Florida, last month, closed sales of single-family homes statewide totaled 28,171, down 15.3% year over year, while existing condo townhouse sales totaled 13,711, down 20.9% from April of 21. Closed sales may occur from the 30 to 90 days plus after the sales contracts are signed. Let's take a look at the days on market numbers from Redfin, and they said that the homes that were sold on the market for a record low median days of 15.5 days, which is down from 21.2 days a year ago. Looking at 2021, we had over just 20 days on the market, and in 2020 we had 40 days on the market, and now we're at 15.5 days, so you could see how the houses are still selling at record pace. And again, a record 56% of homes sold above list price, up from 47% a year earlier. On average, 3.7% of homes for sale each week had a price drop. Overall, 14.9% dropped their price within the first 4 weeks, up from 11.2% a month earlier and 9.1% a year ago. This was the highest share since mid-November. The average sale to list price ratio, which measures how close homes are selling to their asking price, rose to an all-time high of 102.8%. In other words, average homes sold for 2.8% above its asking price. This was up from 101% a year earlier. So these are all just crazy numbers, and that has a lot of people asking, is this bubble about to pop? Well, speaking with experts, most of them say no. And in fact, the expectation of another crash could contribute to keeping homes so unaffordable. Builders have been firing on all cylinders, and with more homes under construction than any time since 1973, they understandably feel exposed in the event of a housing downturn. If they trim their construction plans out of caution, we will miss out on one of the best hopes we have for net new inventory in the market. And the inventory crunch that helped push prices up will persist for longer than expected. If prices did begin to fall, we know there are millions of first-time homebuyers or young millennials soon to be aging into that situation, waiting in the wings to snap up homes if they see a bargain. Those first-time buyers will continue to feel the pressure from rising rents, which jumped 17% in just the last 12 months. And generally, high inflation environment will keep home ownership looking attractive as a hedge against inflation. Now, most existing homeowners are insulated from high mortgage rates thanks to more than 90% of the loans in the past several years being fixed rate, fully amortized mortgages. That keeps people's current bills affordable and will prevent a foreclosure wave like the one that helped cause the housing market to spin out of control and crash in 2008. All right, so Florida's housing market may be showing some signs of cooling. Mortgage interest rates and median home prices continue to rise amid still constrained supply of homes for sale, resulting in fewer closed sales compared to a year ago. Rising interest rates and high inflation are impacting all of us, and those factors are definitely affecting Florida's housing market. However, the state's lack of income tax, our beautiful beaches and waterways, and warm, sunny weather continues to attract new residents, investors, and second home buyers to Florida, especially in today's work from anywhere world. Thank you for watching my monthly real estate market update report and highlights from Redfin and Zillow's update. If you enjoyed this video, please leave a comment at the bottom and let us know what you think about it. And remember, I have people from across the country and around the world reaching out to me every single day, and I absolutely love it. So if you've been thinking about making a move here to Southwest Florida, make sure you take the first step. Give me a call, shoot me a text, send me an email, however you want to get in touch with me. And I look forward to hearing you in the near future, and I'll see you on my next video.